Warm welcome to you all. This is Mike Hamilton from Trade the Easy Way. Apologies for not running the normal Monday night prep. I was detained. But anyway, we've got Fed this week and Bank of England on Thursday. So Fed tomorrow on the 22nd and Bank of England on the 23rd. So what are we looking at? Here is the dollar index, dollar basket, based on the 2022 range. That's the high. This is the low down here. So we had this spectacular run up last year with a very aggressive rate rise, the most aggressive rate cycle since 1983, I think it is. And then of course we've fallen off in the autumn of 22 and then had a decent move push up in February 23. So Fed tomorrow, what do I think is going to happen? I think this will at least ease back to 105. We've got parity down here. I think this is a decent impulsive wave. This is the pullback. So if we close above this 103, 104, I think we're going to start to climb back up again. However, more than happy to scrap that if we can close underneath this 102. On the flip side of that, you've got gold that has pushed up in the early part of the year, pulled back, done a little double bottom here, and then done a decent test of the 2000 mark. So decent impulsive wave, nice pullback. You've got a 5 and 3 wave move in the middle there. But if we can come back and hold this sort of slingshot round about 1930, 1935. Currently you can see we're just under 1950, just under there. So if we can come back and hold this, then I think we can push back up again. Volumes have been good. This is the RSI, just got overbought. So if we can pull, the RSI pulls back, we come back to the mean average, or at least close to the mean average, and then I think we're going to see some buying again and then push back up into those highs. So the gold's got it all to do. We need to hold this level and obviously start to close above this 2000. And you can see now I've pulled back, you can see we started a decent decline here last April, May, and fell right back to 1614 in the autumn before attempting to get back to these highs. Held here, pushing up here, so we just need this to hold to see if we can go back and find 2075 and ultimately 2200. Alright, so that's the sequence I'm looking at. So I'd use the pen, I don't know why I've used the box. Let's get rid of that. So the sequence I'm looking at is for this move up here and this retracement and corrective wave. Has already seen an impulsive wave, looking for that to pull back down here and hold and then run. So silver is doing a similar thing. Silver's had a decent close just underneath 20 and has recently seen 22.70. So here's the trend line support down there at 21.85. I think silver is great, looking higher. And if we start to run, if this chart pattern works out, then I would expect that to... Oops, that's a terrible line, isn't it? Let me do this with a proper tool. Yeah, so if we could come back as far as the 21 area, 21.15. So if we pull back, so we've broken out from that trend line, if we pull back to that and hold, then I can see that. So impulse, pullback, directional wave into 25, pullback, and then subsequently we could, if this all goes well, we could break the 30 and come up here at 32.50. there is a case for this even getting to 35 upwards. I can see if this really picks up on volume, if the volume really picks up here on a pullback here, then I can see this shooting up. Why do I say that? Because if you look at the weekly chart, you will see that if we come back to 30, it'll be but the third touch of $30 since August 2020. I think it's going to be through and through. So if we break out of this pattern and hold above 25, I think ultimately we could get to 35 and 40. And if it really gets going, then I think we could get start hitting the 50, 60 plus mark if we really can sustain the price above that triangle. Right, moving on, let's go back to the daily chart. Indices, Dow. So we've had this, the market's got spooked with the Credit Suisse issue. Credit Suisse issues have been around a long time, they're nothing new. So we've had a really nice move from October, pulled back in early December, did a little three-wave move into that resistance, and now we've done a three-wave corrective wave back down to this support. So this is a key level of support here. We were back down here in November, and at the moment we're holding. So it's a little bit similar to the dollar as we go into the Fed. If we break this 31,700, then we're going to potentially come and find this 30,000 and potentially lower. If we close above 33, then I think we can come on top and push back up to these levels. I think the Fed are, even if they do a 25 basis point rate rise tomorrow instead of 50, most people expect 25 basis points. It's all about, it's not about what the rate rise is, it's about what the reaction is, what the market thinks of it. So you can see this trend line resistance up here. If we just nudge that on that, maybe in that 50% and close lower, then expect this to fall out of here and wind right the way back to this 28.5. And ultimately, if that doesn't hold, then we are coming down to 25, 26,000 at least. Okay, so this is typical when you go into a Fed day. The markets sit on the fence, but whatever way they come out of this little triangle is going to be your direction for the coming weeks and months. Typically, cyclically, you would expect this to hold and push up. So if the market likes the fact it's only got a 25 basis point move, then we could see this push up into April, May, and go and find that 35,000 mark from back end of last year. And that would set this up nicely for, assuming we don't get above there, that would set that nicely up for a tumble from that point. So yeah, this is potentially a bear market rally. So very bearish market last year, a bounce into the last quarter, but already seeing weakness up here, struggling here. So when you pull back into that trend line, around about the 33 mark, could see that drop through and start to fall all the way back. Because at the moment what I'm seeing here is a rollover. We've got a series of lower highs. So unless we start to close above this level here, I see the path of least resistance as lower. Okay, FTSE, bear market rally in the FTSE. We're coming off the 50% here at 7,200. So any push into 7,700, 7,800 would see that potentially get another leg down. So we've got, yeah, oh, I didn't got the wrong instrument again, the wrong drawing tool, sorry. Decent leg down, pull back into last year's high, and then start to see that winding down. If we close above this 7700, then we could wind back up, but I think this would be the target to get short, all this resistance up here. So bear market rally into resistance, and then a potential another leg down, unless we start to close higher here on volume. Right, let's go on to commodities. So I am still bullish this week. So we've had a decent push up here from $675, $665. So if that is the directional wave, and this pulls back to 675 and holds, if we can very soon in the coming days, and certainly into the end of March, hold above 725, then I think this can really run. I'd see us getting up to $8 down to 750 and just winding up. I'm going to be wrong if we close under. Well, I'm potentially going to be wrong if we close underneath this low. Just quickly, natural gas falling right back to support, and the oil is. Now I think this is a really interesting area here. We've come down to 64.50. We're currently 68.50. This is really bullish if we close back above 70. I see this as you can see back in December 21 we were down here before we did that post-war run to 128. We might at least do something like this, a lower high and a break up. If we can hold here and ultimately close above 70, I think this can wind back to 85, 95. I would expect to see 92, 95 this year. There's the 100 mark, $100. I think we're going to see 95, 100. So if we close above that 70, watch out, because I think that will really ping up. Okay, stocks. Miners are doing really, obviously miners are responding to that gold. This is Pan-African, so we've gone down to 1290. Big push off of that support, 1290. Close above 15, and I think we can start to climb back to 1820. And if it has a good year, I think it could do 25 plus if we come out of this. So I think anything around 13.5 plus is a good place to get in. Hochschild. You see the volume coming into this. So I think these are all worth a buy. Let's have a look at this TGAT. Now it's fallen right out of the picture, and the volumes are not picking up at the moment on that one. So I'm just focusing on the commodity side. This is gem diamonds. That's very speculative, but I mean, if that gets above 30 on volume, I think that could be good. Man Group. So we had a really nice run into 290, we pulled all the way back to 214, and look at that bounce. If you see 225 again, we're 240. I think you might see 225 again. I think that's viable. Anything commodity related, I think is good. Even Elementis. So we've been up as far as 130. We've been talking about this for ages now. If we start to close higher here, I think 110 is a buy on that one. IOF. No, let's get back away from that. TPI cap. I think this one's a buy as well. This has been up at 205, currently 175. I think this 170 is a buy with a stop underneath 157. So I'm just into, let's have a look at Rio. That's a buy signal on Rio on Monday. So if we come back to 52.25, I think that is buyable. We could come close to 50. You never know. If you're very patient, that might drift back to the 50 mark. Yeah, and actually, I take that back. I think it's worth trying to wait for 50 on that. If it dips under 50, then that's definitely a buy. I would look for that to go to 65, 70 in the year end if that works out. Alright, that's it for now. If you want to join my newsletter and get involved and listen to my daily prep, then drop me a line. Otherwise, see you next Monday. Thanks very much. Bye for now.